You are all welcome to Scholars and Associates. Tonight we'll be looking at financial reporting. So before we begin, I would like to give the topics for the semester so that when we are moving, you know that, oh, we are done with this topic and we are moving to this topic. So for the purpose of this semester, these are the topics that are available for this semester. We have one IAS1. IAS1, we treated it last semester. We did it last semester. So that is the presentation of the financial statements. So it's still the same. It's still the presentation of financial statements. So we move on with IAS. Move on with IAS 10, which is the events after the reporting period. Event after reporting period. Secondly, to IAS 24, which is related party transactions. So for the introduction, the theories, I'll urge everyone of us to go and have a look at it. Then we can have IFRS 8, which is operating segment. You can also have IAS 8, which would be the accounting policies. Changes in accounting, estimates, and errors. Changes in accounting, estimates, and errors. Then we can also talk of IAS 12, income taxes. What else? Then we can also talk about IAS 32. Financial instrument. I think it has been amended. The instrument, I think IFRS 9. Yeah. Then we can look at earnings per share, which is IAS 33, and that is earnings per share. Then IAS 7 is cash flow statement. IAS 7 is what? Cash flow statements. Then you can have leases as well. IFRS 15, leases. Alright, so basically these are the topics for the standard reports. So these are the topics, financial reporting. So tonight we'll start with IAS 10, events after reporting period. IAS 10, which is events after reporting period. What do you mean by event after reporting period? So these are events that occur between the reporting date and the date in which financial statements are what prepared and authorized, right? So events after reporting period are events which occur at the end of the financial period, but before financial accounts are what are signed and then published, right? So we know that as a business we have financial period, right, or accounting period. So let's say normally let's take January to December. So a business has its um, accounting basis, right? The financial statement date, which is 31st December 2024, right? So it means it is starting from what, January. So let's say starting from January 1st, and then prepares its accounts on December, right? So December, let's say December 31st. December 31st. So events after reporting period are the events that occur after the 31st December. So they are events that occur after the reporting date. So this is known as the reporting date. This is the date that you report your financial statement, right? It's the date that you report your financial statement. So events after reporting period are events that occur from this line. They occur after the reporting date. So let's say from January 2025, this one is ending 31st December 2024. Events after reporting period are here. So this are known as what? The events that occur here. It's what we term as the event after the reporting period. So the date of publication, let's say this is the date of publication. Usually that is 3 months. So let's say January, February, March. 31st March. 31st March 2025. 31st March 2025. So all the events that occur within this period, between the reporting date and the date in which the financial statements are issued, they are issued to the general public. So you see, before they will be issued to the general public, the financial, they have to they would have an annual general meeting. That's where the directors come together to review the financial statements, and then they give out their signatures, right? The directors would have to sign, right? So the events, the activities that occur between the reporting date and the issue date is known as the event after the what, reporting period. So that's why I said the event after the reporting period are the events that occur between the reporting date, so that this reporting date on which financial statements are what, authorized for issue, or events that occur at the end of the financial period, but before accounts are what, signed and then published. So that is the event after the reporting period. So the events after the reporting period can be categorized into two, right? So there are two types of events after the reporting period. There are two types of the events after the reporting period. So what do we say? We have one, adjusting events. Adjusting events. This is one of the easiest standards. Very simple and short. So adjusting what? Events, and then non-adjusting events. Non-adjusting events. So just listen to the name. Adjusting events, non-adjusting events. Adjusting event and what? Non-adjusting event. So what do we mean by adjusting events? What do we mean by adjusting events? So adjusting events are the events after the what, reporting date, which provide additional evidence of conditions existing at the reporting date. I repeat, if adjusting events are events after the reporting date, so they are events after the reporting date, of course, which provide additional evidence of conditions existing at the reporting date. Or let me make it this way: they are events which occur before accounts are what? Signed. So they are the events which occur before accounts are signed, but have to be adjusted in the financial statement before it is signed and presented. Before it is signed and what's presented. So adjusting events, they have the key word here is what? They have some existence. There is evidence of their existence during the financial period. During the financial period. So there is evidence here. There is evidence of their existence here about to happen. So this event shows some conditions. This evidence are what? Material. They are material. So that is the adjusting event.